Welcome to Trading Lounge and the European indices report, but I want to start with the S&P 500 here because it's the strongest market and we can use it as a bit of a benchmark. Obviously we can see here that it's in an uptrend here, and we don't particularly want to fight an uptrend on the downside. However, we were expecting a correction at around the 2200 mark here, slightly above that. However, we are seeing a correction just before that. So we need to investigate and come up with some logical next steps in terms of strategies. But one of the main things here is that because we will be at the 2200 here, like we arrived at the 2100 here, we can expect some type of correction here. So it's not like you're missing much. So if you've made money in the uptrend, don't give it back in the correction, because that's the old story here. So in a nutshell, we're looking from wave 2 here. We're looking for 5 waves up as 1 and 2 and 3 and 4, and wave 5 to the upside here. There is a bit of space for a bit of further upside here, so we need to be a little bit careful. Like I said, it won't range out too far. It will, in one way or another, stick to this particular number and cause a bit of havoc. But let's dive in and have a look at the S&P 500, because it will help us with the European markets as well. Obviously, the European markets in some instances are weaker than others. In this scenario here, we're looking for the top of wave 1 here, and possibly in place here, but we would need to see a breach lower than this level here. The 61.8% retracement level is down here for wave 2, but we know that the S&P 500 has been having very shallow retracement levels, so we're going to the wave 4 of 1 lesser degree here, and that's what we were looking for here, essentially an A wave, a B wave, and a C wave here, and then up from there. But as I mentioned, I know with the trading levels, we're in minor group 1, which is 100, 200 and 300, and when we're working with a level as such here as a minor level, we need to drop down to the sub levels as well, because they can be very helpful as guiding us through. So normally when I'd be looking at a correction at a level, in this case a minor level here, would drop down to the sub level. So sub level, group 1 is 10, 20 and 30 here, 1, 2, 3, and below here is 80, 72 and 65. So this would be the range that would give us the correction in here, and normally we would see the arrival, the reaction, the first high above the level that could go to anywhere here is 10, 20 and 30, and it could even go above here, but not finding support on top of number 3 here, because support on top of number 3 here would separate the order flow from the 2200 and see the market higher. So I would expect a correction here, and this is probably what we'll get here. But the wave count we've got at the moment from wave 4 here is looking at 1 and 2 and 3, and wave 4 here and wave 5 here. This wave 4 here belongs over here, but the problem with this is that I've only got 3 waves to the upside here between wave 4 and 5, and we should have 5 waves. So it's possible that this wave 4 can be over here, and this can be an A wave and a B wave and a C wave, just being a bit skewed before we get to the next level there, and we could see one more 5 wave sequence to the upside here, and then I could bring this across here as wave 5 of 1 here, and then we can move from that point there. But as it stands at the moment, we're working with this one here. So we've got a few things going on here. So because we don't have a clear pathway, we need to be careful. We need to reduce our position sizes, which is fine, because we know we're not going to be in any major trend going into the 2200 here. So don't go into hope land. You need to reduce your position sizes by half or a third. And when you're looking for trade setups, you really need to make sure that they're safe, they're solid, they're better than normal through here, because the adage is, you make it in the trend and you give it back in the correction. Well, when we first arrived into group 2 here, I said we're going into correction land, and we need to be like extremely careful. So let's just sort of investigate this on the smaller time frames here. First of all, a couple of things here is that there is a gap on the cash market at 21.90 here. So the market likes to reach up and cover those gaps. So the move down here to the move up to the 61.8% mark here is trading above that at the moment. So it's hasn't found it as support as such, but this is group 2 here, but it's got support on group 2. It's at the 61.8% level here at the moment. It's above that. Not that it's a big deal. It's at the 72%, but that gap, it's going to try and reach that gap at the 21.90 on the cash market, but it could still be wave B. That's the problem. Okay, so I would suggest if you're looking for safer long trades, you would need the gap on the cash market. You would need to have that 21.90 as a nice tested support. Then you can move up, and we would look at it from this low here as 1 and 2 and 3 and 4 and 5, and then peeling down from that way. So not a lot to be had there. The other count here is that this can be wave A here, wave B, in here somewhere, and then wave C down. Normally Friday and Monday in the bullish market would see the Fridays being positive and follow through on the Monday being positive. So if you see Friday weakness in the morning session for the S&P 500, then you know that we're likely to be doing this, and then you want to start shorting from the 21.80, but as a retested resistance here. And of course, if this is weak, well then the European markets are going to be very weak at that point. I'm going to go to the strongest market at the moment in that zone, which will be the UK market, and we can view this the same as we've just done with the S&P 500, with wave 4 here, wave 1, ABC for wave 2 here on the Brexit, and then the push up here. Now we know there's weakness coming because this move here was strong. This leg's a bit shorter, this leg's a bit shorter still here. We're tapping into the 7,000 here, so there's going to be sort of commercial resistance there as well. So you can see over in the daily chart here, we can see that we have been correcting through here. Let's just go in. So we're basically in a correction, and the question you have to ask yourself, is it completed? That's the point. So we know that we're in a correction here. The 61.8% mark in this little correction here is here. So don't even think about going long unless you're above here, because it's just, it's crazy. So we can count 5 waves from here to here, but on the cash market, we can also count 5 waves from here down to here. So it is possible for this to do an A and a B and a C back to here, and then fall, or it can fall within this trend line here and move straight down. Of course, there's going to be a bounce here and so on and so on. But we are looking for lower ground. At minimum, we're looking at you can expect support at 6.8. This is the 50-60% retracement level from this low to this high here. So that's this, and the 6.8. All of this is going to offer a strong support here. So it could just come to this area here and then move off from there. Otherwise, we would be looking for a larger correction to come back, like the S&P, to the wave 4 of 1 lesser degree down here. So it's going to be a bit of a rough journey going down here, because this is one of the stronger markets. If you want to short, European markets, well, then, have a look at Italy and Spain and so on, because they would be the shorting markets as such. They're just so much weaker. The Euro going over to crossing the channel here and going over to the Stoxx50 here, we're looking at more, a larger, weaker pattern here. And in this case here, we're also, this is a different count here generally speaking, in the bigger picture, but it don't matter. We're still looking for the wave 4 to pull back to the wave 4 of one lesser degree here. I should really have this blue wave 4 sitting where this one is here, but anyway, it doesn't matter. It's just the fact that we counted the 5 waves up here. We, on the DAX, we'll look through 10,800. We got it on the spike. This market's topped out here as well. So, these markets are moving down reasonably quick. We could look at this being under here as well as another 5-wave structure moving down through here. So it can move back up into this area here, but any move up would be very sort of reluctantly, it'd be a challenged move moving back up. And, you get big numbers like this and a weak market, then you get these numbers become very sticky as well. So look to short any downside breaks here. Let's investigate this pattern a little bit further with the DAX here. I also want to point out for the DAX too that just in the bigger picture in the daily chart here, we've got this as an A and a B and a C wave here because we've got overlapping wave structures with the B wave here. But when you look at Italy, for example, we'd look at this as the 3rd wave because this would be the 4th wave. There's no if I can just go into Italy for a moment, we're here. Okay, don't have to worry about this too much, but you can see from here, we've got this wave 1 and 2 and strong 3rd wave down here, and then a weaker 4th wave, or the 4th wave here, and the 5th wave is probably not even finished. So this could very easily make a new low here for Italy. This is a weekly chart here. But with the DAX here, we had this move up here before we had a move down. So we had overlapping wave structures here. So it's a different count. So if you're shorting, go for Spain and Italy and so on from that point. So let's go back to the DAX for a moment because I need to point out something here on the daily chart. And what I want to point out on the daily chart here, like the S&P 500 from this wave 4 low here, we've got this as wave 1, ABC for wave 2. And then we can look at this as wave 1 up here and wave 2 here. We can do that. We could also count this in terms of we could look at this as also being bearish as well. We could look at wave 4 not being completed over here, and this is wave A here and wave C over here, and wave B, which I've got in the highlighted grey area here, which is always the alternative count here. And this is the 50, this box is the 50 and 60% retracement level from this move down here. So it's going to give us grief here anyway, so we need to be a little bit mindful of what's going on here as well. So an A and a B and a C wave here, it fits very nicely as well. It may not be the case, but I have to point it out because it exists and it can't be ruled out at this stage. The other count that we've got for this too is really having this as a wave 3 here and pulling back to this wave 4 here of 38.2 retracement, or the wave 4 of 1 lesser degree. But I can also count this as simply 1 and 2 and 3 and 4 and 5 here, and also pulling back to the 61.8% mark. This is around the 10,000 here, so any move that comes down close enough to here is obviously going to be pulled into this number once again as well. So we need to be mindful of this, but let's just dive in here and have a little look on the 4-hour chart and 2-hour chart and so on. So in this case here, I've got that counted like this here. I'll just remove that up there, try and make things as clean as possible. We don't need this here. So from this wave 2, if that's going to be the case, we could look at this first move up here as wave 1 and then wave 2 back here. That's logical to do that. And then we could also look at this as wave 1 and 2 here, and then 3 and 4 and 5 for the third wave here. An A and a B and a C back to the wave 4 of 1 lesser degree, or the 38.2 retracement level. In this case, they both come very much the same here. If we were looking at this as wave 1 up here, like I mentioned before, then wave 2 would come back a little bit lower here. Not a big deal, but in one way or another, we've got 5 waves up here. We are looking for a correction here, and we're getting it. Now, as mentioned, some markets are going to be weaker than others in their move down through here. This here may not have completed its first, this can be 1 and 2 here, and 3 here, and 4 here, and 5 here, and then the A, the B, and the C here, and then down from that point there. In one way or another, it doesn't matter about getting into the nitty-gritty just yet, but in one way or another, you need to acknowledge that the market is in a correction and, you know, trying to buy off the lows. I mean, obviously, there's support here. So when we go into the 2-hour chart here, we can see that we're in a rock and a hard place here because we've got this trend line support coming through here and we've got this trend line coming through here. So obviously it's going to break there in one way or another. I would be very reluctant to be going long, even if we do see the market move up a little bit higher through here, because this is the 61.8% retracement level here. So we could say that's at 10,700. So what we could say is that on the long side here, we could say if you get a tested support on 10,700, then go long from that point. But otherwise, allow the market to breathe, allow it to have its correction, and it can possibly move lower from this. We're expecting it lower. We don't have a clear pathway for this move here at the moment. And, you know, the levels in here as well. So from 10,000, we've got, that's a major trading level. Then obviously we've got the medium trading level, and then we've got minor trading levels, and so on. So here we've got the Fibonacci numbers as price ratio as 1, 2, and 3, then 5, and then 8 here. Now, the halfway between the 8 and the 5 is the 65 number here, the 650. That always plays out as a very important number here. Unusual number, that little 65 number, but it's it plays out. So that's really our sort of resistance, and this little area here is our block of supply here, our resistance where the volume is sitting. So you'd need to allow it to give it space to move up here. You could trade it up there and all the rest of it, but you know, position sizes need to be smaller and so on. So we're either going to get something like that, or it's just going to break lower from here. With trend lines, as you know, when a market moves through it, bounces off it, moves back, comes back and retests it. That retest is important. That sets up the trap here, and you got your trigger and you move down that way here. Obviously, the market's going to bounce off the 10.5 here as well, coming back here. So it's something else you'll need to accommodate, and that would need to lock under there before it moved any sort of lower here. It's a correction. It's not a pretty picture. The structures in here are just really not that clear to work with here. So I was just sort of shooting the breeze here a little bit. The move down here, you know, it could be counted as an ABC pattern, or it could be counted as 1, 2, 3, 4, 5. It's messy, and we're probably still in the B wave here. I just don't know. We're either got this B wave sitting on top here, which looks like it on the cash market and will drop straight down from here. But on the futures market here, it also looks like we've got 1 and 2 and 3 and 4 and 5 to finish here and then down. I really don't know. This is a little trend line through here. There's another big trend line coming through here from the low there as well. I just think that, yeah, look, if you see Friday session opening firmly, then you know that we're going up, and we'll probably follow up. But if we see the Friday weakness coming in the morning session, well, then you can expect Monday to be the same as well. It's a little bit like the weather. It's you know, there's 70% of chance of the weather being pretty much the same as it was yesterday. Follow through like that. So all good. So just have a quick look at the CAC as well, because we've been looking at it as well. So in this case here, we've been looking for the 5 waves up here. We're also looking, you know, I could label this wave 3 like the DAX as well, but it doesn't really matter because we've got our internal structures working quite well here. This little area here will be interesting because it's always interesting to have the 50-60% mark knocked out from the previous trend. So from this move up here, this is the 50-60% retracement level here. And I always look to see if we get 5 waves or 3 waves to this particular point here, because that makes, you know, it changes the game. Once again, I would not be going long here unless, you know, unless we're above this previous high here at least. You know, it's just, yeah, look, as I mentioned, we're in a correction. Allow it to breathe. Let it do its thing. Don't be an idiot. Don't make money in the trend and give it back in the corrections. You know, reduce your position sizing. You know, because if you've made money in a market, you've formed attachment. You know, it's the honeymoon. You think it's going sweet. You know, you haven't been through the full marriage yet, and the correction is the tough time. So be a little bit more careful. So the main thing across all these markets, it's difficult to work out if we've got 5 waves down or 3 waves down here. But like I said, allow the markets to we've picked the tops. We're in a rock and a hard place at the moment. Let's just allow them to move out, and as they mature, we will be able to figure out exactly where we are within the structures, and then make the next trades there. All right, I think that pretty much covers it. Any questions? Just use the trade check, and we'll analyze that market for you. Cheers.